Good morning and welcome to this Monday, December 21st, 2020 edition of Trading Places Live at Earnings Beats. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats, and I'll be your host for the next 30 minutes featuring everything you need to know as you prepare for the trading day ahead. We're waking up to some pretty red futures. Haven't seen too many gap downs of this magnitude, or at least potential gap down of this magnitude. We got about 30 minutes before the market opens, but we are seeing a pretty good hit to the futures, but we'll go through all of that this morning, take a look at some of what's going on. But been a while since we've seen the Dow futures down 400, NASDAQ down 130, S&P down 60. But again, we'll talk a little bit about that and some of the things that I'll be looking at throughout the day. We've got a good show, I think, lined up. We had a great event on Saturday, our Market Vision 2021. Very well attended. Want to thank everybody that was able to make it. And of course, it was recorded. So all of our annual members can go back and review that at any time. I believe it's going to be broken down by session. So for those maybe who haven't heard about it, Grayson Rose and David Keller joined me on Saturday. Of course, Grayson and Dave are both from Stock Charts. And I thought it was fitting to have them join us this year just because I think the combination of what we offer at Earnings Beats plus what Stock Charts does and the information that they provide and the consistency of their platform and everything, I think the combination really helped a lot of folks through 2020. So I thought it would be a great opportunity for us to kind of combine our skills and talents and so forth to take a look at 2021 in terms of products, in terms of outlook and so forth. And like I said, very well attended, had some great feedback from it. So I really appreciate everyone stepping up and joining us on Saturday. I know it was a weekend, but if you're anything like us, we're still kind of socially distancing, keeping our, mostly to ourselves. And so I tell you, some days I don't know what day it is. I only know if the market's open, that means it's a weekday. Every other day seems to blend together. But let's go ahead and take a look at a few things, and I'll walk you over to Earnings Beats first. I do want to make one announcement about our holiday special. We've had a lot of folks writing in, some folks who have just recently taken us up on a trial offer, and they're asking us to push it back a little bit, give them a couple days to evaluate. So we did agree to push back our special to Monday. So it was going to expire on Saturday, but we've given it 2 more days. So check out this holiday special. If you go to earningsbeats.com, you can click on that holiday special at the top, and it'll bring you back here and check it out. Basically, 2 things you really need to know about it. 14 months for the price of 12, and it includes our new ETF service at no additional charge. And that ETF service is going to kick off in about 10 days, 10 or 11 days. So that's going to be a biggie because you won't have to pay for that service until your annual membership expires, until it comes up for renewal. So that's any existing members, annual members, it's a good reason to extend. Even if you go out a couple of years, we're not going to charge anything until you come up for renewal. So I just want to make sure everybody's aware of that. If you are new to Earnings Beats, love to have you in our Earnings Beats Digest community. This is completely free. No credit card, unsubscribe at any time. Really, it's just us. I like to give back to the community, and this is one big way with this free Earnings Beats Digest. If you like what you see there, I think you'll love our service. But focus on relative strength, earnings reports. When I say relative strength, I mean that's kind of the key to our look at technical. When we look at technical analysis, we want to make sure that we're in leading stocks and leading industry groups, or at least a leading stock in an industry group. Even if the industry group is weak, you want to make sure you're investing in leaders. You don't want to be in laggards. You'll watch your money underperform the S&P 500 if that's your normal routine, and we don't want to do that. We want to outperform the S&P. But anyway, that's there and available. You can try us out. Check the service out today. You got a 30-day trial. Essentially, it's a free trial. You pay $7, but we refund it to you within a week. So, you come in, check the service out today and kind of make a quick decision whether or not you think this is something that would benefit your trading or your investing. I think it will, but check us out. All right. Also, in terms of our holiday schedule over, Christmas, New Year's time period, first, Trading Places Live. I will continue to do that through Wednesday of this week, which will be here today. Obviously, then I'll do the Trading Places Live recording that I've been doing over at Stock Charts. That'll be Tuesday morning. I'll do this one here live on Wednesday morning, and that'll be the last one of 2020. So the next one after Wednesday will be Monday, January 4th. So be a little bit of a break there. Hopefully I don't remember, or I don't forget how to do these in that period. You might laugh, but I tell you, when you don't do something for about 10, 12 days, I'll probably be all discombobulated come January the 4th, but we'll get through it. As far as the services, daily market report, I'll probably issue two. I'm thinking Monday, Wednesday, but that might be a little flexible. Daily market report out to our members, which normally goes out every day. It might be abbreviated, and it's not going to be every day during the holidays, but it probably will be a couple of times next week. There will likely not be one on Thursday. So you got through, I'll be doing it through Wednesday. So no DMR on Thursday, and then probably a couple next week. Might be Monday, Wednesday, might be Monday, Thursday, Tuesday, Thursday. I don't know. I'll kind of keep you posted on that. But as far as customer service, if you're writing into customer service, we will monitor emails coming in, but it's not going to be a full-time thing. So you might have to have a little bit more patience in getting your responses. Might be a day or two. So just keep that in mind. We do want to wish everyone happy and safe holiday season, though. And thank you for all your support in 2020. We really look forward to a great year ahead. Hopefully we'll get this virus behind us, maybe by the second quarter, and start moving back toward a more normal life. I think everybody would enjoy that. All right, let's keep moving on here. I want to take a look at what happened on Friday. Dow Jones Industrial Average finished down 124, S&P down 13, NASDAQ down 9. So on a relative basis, there was your leader. Mid caps down 10.5 points, almost a half of 1%. Small caps down about 3/4 of 1%, so about 8.5 points. So as you look across here, you can see that the weakness actually came in the small caps and the mid caps, then moved on to the Dow. Sectors, materials had a pretty good day, and I didn't show consumer staples here, but consumer staples was the second best. But those were the only two that really showed much strength at all, and it wasn't a whole lot on Friday. The laggards, the primary laggards, the two that lost more than 1%, real estate and energy, down 1.7% on real estate. It hasn't been a very good December, and I posted the beginning of December. This is the one group that tends to have strong Decembers. And it really hasn't been. We were prior to Friday, we were maybe flat for the month, and then with the losses on Friday, we're definitely down month to date on real estate. Energy, you can see that PPO rolling over. You actually had a negative divergence on the last high, so be careful if that doesn't hold the 20-day moving average. I could easily see it back down to 35, 36 range. Autos, another big day on Friday. Autos up 4 2/3%, another 38 points. Just breaking out to another all-time high. Really, really strong year for the autos. And then diversified REITs. There was actually one group I think that was weaker. I think it was the tires group. But tires, it's mostly controlled by one or two companies. But this diversified REIT group, like I mentioned, we had a really rough day in real estate, and this group was down 3 1/3%. So not a very good day. Finished back below the 20-day moving average. That could be problematic. And you can see on the most recent attempt to break out that PPO is declining, very similar to what we saw back here in September when we were trying to break out above that August high. See how that PPO had rolled over? Next thing you know, you lose the 20-day, and then you see some more selling. So that's what you want to be careful about, with this group. All right, let's talk a little bit about the 10-year Treasury yield and some news that came out over the weekend and the reason for the futures being down. I'm going to get an update here first. So you can see right now we're at 0.91%. We gapped down, trying to rally back. We're sitting on that 20-day again. I think the question for me right now, just looking at the yield, is do we hold the 20-day and break out? Or is it, because of some of the news that's out, are we going to struggle with money, a little bit more fearful moving into treasuries later in the day? And do we break back definitively below that 20? Because if we do, then I'm going to start thinking more about sideways consolidation as opposed to a trend. I think we've been trending higher for the most part. But failure, a weak day here on the yield, meaning a strong day in treasuries, would suggest that perhaps the recent low and this gap support will come into play as support, and resistance will be up more along the lines 0.97%, 0.98. And that would be a range that I would look for in the short term as we consolidate. Either way, I still feel like it's bullish and we're going to break out. I would only begin to think otherwise if first warning sign for me would be losing 0.82%. So watch that. And the ramifications there are when you get into a period where the 10-year treasury yield starts to roll over, that's when you could have a little bit more volatile action in the S&P 500 and in U.S. equities. So that's why we want to keep an eye on it. Otherwise, if this keeps going up, if we keep trending higher, that's telling us money's coming out of treasuries. That would suggest to me that it's much less likely that we're going to see much selling in the stock market. So watch this. This would be one of the clues to keep an eye out, not just today, but in the days ahead. If fear seems to be building and the headlines seem to be growing, some of the headlines, which I'll talk about in a second, if you start to see more of those and we get gap downs, we really want to watch the 10-year treasury yield and see how the bond market's reacting. All right, so the news out, some of the things that, are causing some of the problems. Actually, first, we had some pretty good news. Congress agreed to a $900 billion stimulus deal and also averted a government shutdown. So they did have an emergency one-day funding bill, but now as part of this stimulus package, they've also provided $1.4 trillion to fund the government through September 30th. So we've got a couple of things out of the way that maybe the market was a little bit nervous about. So I find those two to be, bullish for equities. Within that $900 billion stimulus deal, there was new money set aside for households, small businesses, and healthcare providers. So we're looking at $600 going to most adults and $600 per child, $20 billion to small business grants, $15 billion to live event venues, $30 billion towards the procurement and distribution of COVID vaccine, $15 billion to airlines. But I think there was a stipulation in there that the airlines had to bring back furloughed workers. So in other words, here's the money, but bring back your employees and give them their jobs back. In addition to this package, and the thing that's really spooking the market is that the UK has apparently identified a new strain of COVID that spreads much more rapidly. And so we've got countries around the world now that are issuing travel bans in and out of the UK. So, it's kind of like a little mini revisit to what we saw last year, and maybe it's going to be more than just a mini. We'll see how things unfold. But experts are saying they still believe that the vaccine's going to work, even though this is a different strain. And they also don't see any evidence at this point that it's worse in terms of fatality rates or anything like that. So it's still early, way early to tell, but the headlines are grabbing a lot of attention. So I just wanted to mention that. And that kind of leads me into talking technically today. I want to bring up the QQQ, which is the ETF that tracks the NASDAQ 100. And, if we go back, with this, new strain of the virus potentially, and, I want to just walk you back down memory lane. I'm sure you remember, and especially if you're an Earnings Beats member, because we talked about this over and over again. But if you look back at what happened to the QQQ and many stocks back in February and March, when we first started, believing that this virus was going to have a much bigger impact here in the US, you can see that initial drop at the end of February, this huge drop, and you can see the AD line, accumulation distribution, taking a drop. And the reason why the AD line was taking a hit. Number one, look at the volume picking up, and look at these filled red candles. Now, if you're not a candlestick fan, if you close below your open, then you're going to see a red filled candle. If you close above your open, you'll see a hollow candle. Okay. And then you'll see, hollow candles with black border, hollow candles with red border. The difference between those is that with a hollow candle with a black border, not only are you closing above your open, but with the black border, you're closing above the prior day's close. So it's just, just think of that as kind of bullish on top of bullish. Here, think of the red hollow as still a little bit of a warning, because yes, you did close above the open, but you still closed down from the prior day. So that's the difference between these two hollow candles, is one actually finishes strong but closes above the prior day's close. The other one doesn't make it back there. So it's still down for the day. So a little bit more reddish behavior, if you will. But anyway, when you look at the February move lower and you see those red filled candles, that's why the AD line takes a big hit, because when you're closing at or near the candle body low of the day, that is your multiplier for the volume. So if you finish right on the low of the day, then essentially what happens is 100% of this volume is subtracted. Now, if you close in the middle of that day's trading range, then it's 0% of the volume. And if you close at the top of that day's trading range, forget about whether you closed higher or you closed lower. If you rally and you finish at the high end of that day's range, that's a positive for AD. Why? Well, when everything gaps down at the open, you're trying. Are you buying? Is there buying taking place from the open, or is there selling? If you open way down and then recover, like you did on this hollow candle right here on March 6th, then you're going to see a positive impact to AD, even though you went down for the day. That's the difference between the AD line and the on balance volume. On balance volume doesn't care what happened during the day. On balance volume says you close lower, whatever the volume is that day is subtracted. I don't care whether you came back up and finished at the high of the day. If you closed a penny below yesterday, then all of that volume is going down on the OB. So that's why you see variations between the OBV and the accumulation distribution. But anyhow, after this first move down, you see the second move down. You see all these hollow candles and not nearly as many big. I mean, here's a big red filled candle and here's another one. So it's not like we didn't have any of them, but we had a lot of these hollow candles where we were finishing back near the high of the day. So as prices kept going down, look at the AD line. AD line never took out that late February low. Now this is the QQQ. If you go to individual stocks, you'll see that there were actually stocks that were doing, even much better than what the QQQ was showing. So let's take, for instance, a stock like Cloudflare. So we went up at the end of February, even with the market going down. Any move down, look at this. I mean, some of these had red hollow candles. They went down from yesterday's, the prior day's close, but they rallied off of earlier lows. And so as the stock was going up, so too was the AD line. And then notice when we did finally see drops in this stock, and you might look at it and say, well, yeah, but it didn't really go down that far. Well, it was at 25, and 2 weeks later, it was at 15. 40% drop in 2 weeks. I think that qualifies as a pretty big drop. But look what happened. AD line was going up. And that was really important in understanding how to trade the rest of 2020. That AD line was money. I mean, it was like, I don't know, I'd call it the golden indicator for 2020. And I never used the AD line. I was somewhat intrigued by it. And I've actually done some research on my own that was kind of similar to the AD line. But when I saw what was going on in March and April with these AD lines, that's when things kind of changed for us at Earnings Beats. So when I say, I want to see how the market reacts after the open, that's what I'm talking about. Are we going to gap down the Dow 500 points and then finish down 1,500 today? Because that to me is a lot of distribution. That's a lot of selling. Now it would only be one day, but still that would be a lot of distribution. If we gap down 500 and the Dow finishes positive today, then it's going to be telling me the exact same thing we saw back in March, that all of these headlines and the hype and the negativity at the open is creating an opportunity for institutions to buy cheaper. And so we want to continue to watch that. Now, looking at a stock like Netflare, as it's continued moving up, look at the stock just keep going higher and higher. Look at the weakness here. You see at the beginning of September how we went below all these prior lows. The AD line didn't go below these lows. It held. And then as soon as the stock started to move back up, AD line breaks out. I think that's a really good indicator, especially when you're talking about a stock that was showing relative strength. Now, we did lose a little bit there, but look at the relative strength on the stock. Look at the volume coming in. So much institutional accumulation in a stock like this. And it's in one of our portfolios, and there's a reason why. I mean, it's been a great performer. I think this one might be in our strong AD portfolio. It's either that one or the aggressive. It's not in the in our model, but it's been a great performer, no doubt. So you got, and then, maybe one of the staples, Apple. When you look at Apple, kept going lower on price. AD line never broke down below that first low. And then going up, AD line just takes right off with it and has been fine since. Peloton. I mean, this was a stock I talked about on the very first episode of the pitch that they had over at Stock Charts TV on April 1st, right here. And I talked about it because look at this drop. Stock was at 30, in the mid 30s, went all the way down to about 18, 17, 18, right in here. But notice the AD line was breaking to a new high while the stock was breaking to a new low. And then look what happened afterwards. So what this was telling me is that, yeah, we were going lower, but it was mostly based on gaps to the downside. We were actually finishing fairly strong many of these days at the midpoint or the upper half of the candle body. So as prices were going down, AD line was going up. And I know I'm spending a lot of time on this, and I've talked about it before, but anybody who's new to earnings beats really needs to understand what we've been seeing in the market, because as we look forward, and if we start to see these drops, at the open, what happens after the open? That's what I'm more concerned about. All right. Last week, I just want to mention one other thing. Last week, SolarWinds, there was a hack which affected many companies and government agencies. And if you look at any of the cybersecurity software, kind of like, think about what happened with Zoom and Peloton as a result of the pandemic. They benefited from something that was really not good for our overall economy and for healthcare. It was a big strain on our healthcare system, but it aided their company. When you think about a cyber attack or something, cybersecurity issues, who's that going to benefit? Well, it's going to benefit those companies that provide, better security against cyber attacks. So you got a couple of companies last week that really benefited, and I wanted to pull those up. So one was FireEye. Stock had a huge day on Friday. I mean, check this out. Look at the volume that came pouring into the stock. Now, I'm not saying I'd go jumping into FireEye, but when you start seeing these attacks, it's something for management to start thinking about. We need to make sure we're up to speed on our security. And so it brings companies like FireEye into play. Now, it's way too early to say whether or not FireEye, whether their business is going to explode off of this, but clearly the market took notice on Friday. And another one has actually been one of our favorites in the market. It's never made it into our portfolios. I'm not quite sure why, because it's been a great performer, but CrowdStrike, look at the day it had on Friday. Look at the volume coming in. Look at the relative strength. I mean, this has been a strong stock in one of the strongest areas. I think it's just been a numbers game for me with CrowdStrike. I mean, we've had so many other companies that have been strong in the software space. It just never has been picked, but it's a great company. And so this is one that could benefit from that type of action. All right, one thing I want to go over today, I want to look at scans just for a second. And, when you think about breakouts, and actually what I'm going to do, this is a very simple scan, but I'm going to go in here. And take a look at scanning strategies. Now we have a number of scanning strategies. This is a very simple one, the 52-week high. That's one of the scans. So if you're a member at Earnings Beats, you can grab any of our scans and just copy them and go over to the scanning area and just hit new scan. Get rid of what's in here and then paste. All right, so that's just going to give you the scan syntax to run a 52-week high, but this is running it against the entire universe of stocks at stock charts. The other benefit that you can use, with our research is once we publish our chart lists and allow our members to download them, which you can download each of these in seconds into your own stock charts account. But I can then go in and I can select, for instance, strong earnings, strong future earnings. Let's see what else. I'll throw in strong AD. All right, so now what I have to do though is if I say give me any stock hitting a 52-week high that's in all three of these, that's what this and clause means. So it's got to be in this one and in this one and in this one. Well, these first two, strong earnings and strong future earnings, never have the same stock. So if you run this scan like this, it's going to come back with 0 results. And if you want me to show you, I will. So there you have matching result 0. It doesn't mean that none of the companies have set a 52-week high. It means that there are no companies that are going to be on all three of these lists. So what you have to end up doing is putting in another bracket here because it's this filter and it's going to be any of these. So you got to put or clauses in here, not and, so that it can be in any of these. Okay. And then just make sure you're getting your brackets right. All right, so that closes it now. Now, the next thing I can do is, let's say I want to add a filter for scooter. So I want to see breakouts on the list, but if it's a 99 scooter, chances are it hasn't really had meaningful pullback. So sometimes what I'll do is I'll add this scooter, and the default is above 90, but I'll just change this to below 90. And I have no idea. I haven't run this, so we'll check syntax. Everything's good. So now what I'm doing is I'm running a 52-week high against our three of our key chart lists. If a stock is in any of these 3 chart lists and it's got a scooter less than 90, it should get picked up. And let's see if we have anything here. 85. Okay, that it means I need to. And another thing, think about that for a second. 85 stocks have scooters under 90 on our chart lists that have broken out to 52-week highs on Friday. One thing that tells me is that, my gosh, we got a secular bull market going. If you can have scooters, if you can have 85 stocks just on our chart lists that are setting 52-week highs that don't have a scooter over 90, to me, that's saying everything's going up. All right. But we can further filter this by saying a scooter under 80. And let's run this scan, see how much further it drops. Now we're down to 37. One other scan we could put in here is, well, let's just go with that. Let me just pull this up. You can sort it in scooter order. And so here's a stock. And then you might look down here and you've got it in scooter order, put it in industry group order so that within auto parts, now it's sorted in scooter. But go down and find, I know commercial vehicles are 2 that I like, or that's one group I like in the industrial. So let's take a look at Toro. Well, AD line's breaking to a 5-month high. It's just now breaking out after trending a little bit sideways here. This is a good solid group. Stock's beginning to show relative strength. But everything else on the chart looks really good. So if I like the stock, maybe this is one I want to wait and see if I get another 20-day test. I certainly would be careful if it closes below the 20-day because it hasn't been a great relative performer versus the group. But I do like the group. So that would be an interesting stock to at least consider. Let's see, technology, electronic equipment. That's an area that I like that's been showing more strength. So what's Sony look like? Well, Sony was going sideways here. Now it's just broken out. AD line strong. So you got another stock making a nice breakout that potentially could be worth viewing. Dolby Labs. This is in our income portfolio. It's in entertainment. Let's take a look at the Dolby Labs. Well, this one's been going up slower, but look at the volume coming in. It certainly is reeking of accumulation. Look at the AD line breaking to new highs. So I think things are looking pretty good there. Anyway, just wanted to show you how you can run a scan using our scanning strategies at Earnings Beats and how we use our chart lists. I mean, we have a tremendous research platform, and I think using our tools and research, a lot of times you can quickly identify better trading candidates, and that's the key. Get into better stocks. I know everyone's talking right now, or was talking about energy, and I had an email that came in and said I missed the boat. Well, I don't look at it like that at all. I'm not interested. I said the same thing about gold. Remember when gold the summer was going up, everyone's saying, oh, you missed the boat on gold. And I said, well, short term, if you want to stick with gold, great. If it breaks down, get out. And look what gold's done. These areas of the market that have long-term relative downtrends, be careful getting all excited about a short-term move to the upside. I still am very, very cautious on energy. Can you trade it? Yeah, you can trade it. Just be prepared to exit. If they start breaking down, that's a group I would not trust. All right, what else do we have today? Not really much in the way of earnings. I know the market just opened. We're going to take a look at that one second. But earnings, we had one company, FDS, FactSet Data Research, came out with it's already a pretty volatile day. It opened at 343, went as low as 336. Now it's at 345. So trying to hold on to that 20-day moving average. And all of that came with just 2,800 shares. So that tells me, obviously market makers are doing a little bit of directing of traffic, I would say. To have a $9 swing with 2,800 shares is pretty crazy. And it's another reason why you got to be careful reacting at the market open. Anybody seeing this upset because, the stock's going down after earnings, you can get manipulated out on very few shares, and all of a sudden then you're right back up again. So I'm not a big fan of trading in the morning unless I like the stock. Then you can use some of that weakness in your, to your benefit. Couple other companies that will be reporting later this week, Cintas and CarMax will be reporting tomorrow. I think they both report after the bell, although CarMax might be before, so check that out. Double check the time, but they both report tomorrow. And I think Wednesday Paychex reports. There are other companies reporting, but those are a few of the bigger ones. Economic reports later this week, because Thursday is Christmas Eve. The initial jobless claims got moved up to Wednesday. We do have a number of economic reports out, many housing reports coming out. I think existing home sales comes out tomorrow, new home sales on Wednesday. Some of the other housing reports come out. So tomorrow and Wednesday will be pretty busy in terms of economic reports, just so you're aware of that. All right, let's move on to the three you must see. I'm going to actually take a look at the three best performing S&P 500 stocks from Friday. So the first one was, and actually let me go ahead and bring this up. First one was FTNT, which is a software company. This is Fortinet. And after breaking this downtrend, it's beginning to show nice strength. It was a laggard for a while, as you can see, but the relative strength now has moved up to about almost a 4-month high. Actually, it looks like it's just about at a 4-month high. So we are moving up. Any kind of a test of the 20 is where you really want to take a shot, because if it's a leader and it comes back down, hits that 20-day, many times you'll get that break, or maybe temporary break to the downside, and then it reverses. So if you see that reversal on the 20-day, that's when I would be most interested. Now, I like the stock now, but the problem is when you get far away from your 20-day moving average, like right now, 144, 20 days down around 130, you got a 10% drop just to get to your 20-day. So if you get it now, you just have to realize you're taking more risk. Doesn't mean it won't be a great trade from here, but anytime you're getting a stock well above its 20-day, when it's trending higher, you're taking on more risk. The second one that I'll mention is ABMD, a biomed. So this is, as the name might imply, it is a medical stock. You might think biotech, but it's actually a medical equipment company. And you can see the medical equipment stocks have been going up, but their relative strength has been going down. This stock, however, is starting to show relative strength versus its peers and the S&P 500. And I like this break because I think off of this uptrend, I mean, this stock ran from 120 to 320. So you got to give it time to consolidate. I think it's going through a lengthy consolidating process, but I think we're going to eventually see this cup. I think we're going to go back up to that 320 level. From there, we may see a little bit of a pullback, little handle. Ultimately, I think the pattern here looks pretty good. I really like that volume coming in as we make this move on Friday, but very similar to Fortinet, you've got to watch that rising 20-day. I think that's your risk if you're getting in now, is the trip back to the 20. Last one I'll mention is MLM, which is Martin Marietta Materials. Sideways consolidation taking place. It was starting to show some relative strength versus building and materials, that industry, back at its high in October. Since sideways consolidating, however, you can see that on a relative basis, it's been going mostly sideways. I'd just say watch for a breakout here. I mean, I like that 50-day test. I don't have a PPO on here, but I'm sure that's unwound the PPO probably back down to the center line. And now we got the AD line breaking out to a multi-month high. Breakout above 285, 290 would be very bullish for the stock. All right, let's take a look at the market, get a quick update, see if what we're doing. Well, the Dow now is only down 200. NASDAQ down less than 100. So we've at least bounced back initially. Let's see what happens throughout the day. Nike having a big day. That was one of the stocks that Grayson, Dave Keller, and I all pointed out as among our favorites in the Dow. So I doubt that it's the reaction from our Market Vision 2021 that's sending Nike higher. But hey, you never know. Maybe we were getting so much attention that everybody's jumping in as a result. I don't know. But Nike, anyway, having a really strong day, up 6% today. Goldman Sachs strengthening. It has actually not been as strong as Morgan Stanley, though. I actually like Morgan Stanley better. But both are breaking out today, having strong days. Looks like financials in general with JP Morgan, Bank of America up there as well. So financials getting a lift, which I think is good. We want to see everything participate. Because I've had some emails, and I guess maybe when I talk about financials lagging and some of the other areas, energy lagging, real estate, utilities, I think folks take it the wrong way. When they start to lead, they believe that means things are negative because some of the lagging groups are leading. Don't think that at all. For a period of time, I think it's fine for any group to lead. I want all these groups to remain very strong technically on their charts, price charts. It's price relative charts that I'm really talking about. Now, financials, I wouldn't mind if financials actually lead the market. I think that would be very bullish. I just need to see more strength coming out of that group before I'm going to buy into it. That's all. All right, now the Dow's down 155. So we're seeing a rally. I don't know if this continues the rest of the day or not, but that is, to me, what we need to focus on is not the headline news, not the gap down, but what's going on throughout the day. Is the market being accumulated or is it being distributed? I think that's the key. Anyway, everybody have a great day. I'll be back tomorrow over at Stock Charts for your next Trading Places Live. Again, if you came in late, we're going to have a modified holiday schedule going forward. The last Trading Places Live show of the year will be Wednesday right here at Earnings Beats. After that, there will actually be one on a Thursday at Stock Charts, but it'll be an evergreen. So it'll be something that I record that's not related to what's going on in the market. And I'm going to be recording a new one. So you'll want to check that out on Thursday. And next week, we won't be doing Monday and Wednesday here at Earnings Beats. The ones over at Stock Charts, there will be recordings. So you'll still have Trading Places Live Tuesday and Thursday next week between Christmas and New Year, but they won't be recorded live versions, if that makes any sense. They'll be previously recorded, shows that won't really be focusing on what's taking place currently in the market. Customer service will be, definitely scaled back quite a bit at Earnings Beat. So if you do send us an email, just have a little bit more patience. We'll get back to you, but you might have to wait a day or two. It may not be, I know our customer service team is very vigilant about trying to get back to folks as quickly as possible, but we want to give them a break during the holidays. So we'll be monitoring it, but it just won't be, at all times. So just have a little patience there. If you don't listen to us anymore this week or whatever, I do want to wish everyone happy holidays. Be safe out there. Be smart. Protect those around you as well as yourself. Anyway, everybody have a great day. Be back tomorrow over at Stock Charts. Take care. Happy trading.